Alright, what is going on, everybody on YouTube? Griffin here, coming back to you guys with another live stream from the Millennial Motivation Entrepreneur YouTube channel. You're going to have to just bear with me for just a moment, just making sure that we are live and going. YouTube has this completely new setup for the live stream, so just getting it all figured out here. This is my first time using it, so if you're watching this after it uploads and not live, then definitely feel free to fast forward probably about a minute or two, just because, like I said, YouTube changed everything up today on us out of nowhere. It looks like we're live and going, but like I said, if you're watching this after it uploads, definitely feel free to fast forward about 30 seconds to a minute or so, just because, like I said, getting used to this new setup that YouTube just threw on us today. So looks like we're up and going. I'm just gonna go ahead and share the stream real quick to our Discord group chat, which, by the way, if you're not in there already, link for that's down below. It's totally free. I do not try to sell you guys anything over here, of course. Just pretty much using YouTube to just create a forum of like-minded people. We have about 200 to 210 members in there, so if you want to just learn from a bunch of like-minded traders, definitely hop in there. We talk about options, futures, super heavy in futures, but we also talk about options, different types of stocks, stuff to be on the lookout for with earnings, and that's what we're going to be talking about today, is a stock that has been very, very, very speculative lately, going back to the 1 year, 1 day chart, NKLA. So a lot of people are comparing the stock to Tesla, which I think is laughable to say the least. At least as of now. I mean, when you just look at everything, I mean, it's really a scam of a company at the current moment. Not as bad as another one that we can do a whole nother video about someday, Kodak. Hugest pump and dump in recent memory, outside of maybe Tilray, of course. But currently we are focusing on NKLA, and we're going to talk about that today. We're going to talk about a couple other positions we had today, how we managed to close around $400 in profit trading NKLA as well as O, and just how I went about finding. A lot of you guys probably don't even know about this company, and had a big move today. We'll talk about how, when I trade options, those of you that have been with the channel for a while know that I don't usually trade options too often. If I do, I use vertical spreads a lot. I'm very against just straight up calls and puts for the most part, unless if obviously you have, say, a $10,000 to $20,000 account. Then at that point, if you want to risk $100 or so on some naked calls, naked puts, then go for it. That's what I did. That's what I do during earnings season, and that's what we're going to be talking about today. And of course, if you guys have any questions, or if you have any stocks that you want input on in reference to either options or even just simply buying and selling, definitely just shout it out there in the chat. And of course, any other questions are welcomed as well. I'll be checking that periodically. But yeah, so with that, we'll just go ahead, we'll just pull up kind of what we're looking like right now across the board. You can see we are down on pretty much at the moment most positions, not too much outside of this micro Dow, which of course, I mean, if you're a newer trader, you're probably looking at that going, wow, down over $300. This is primarily a hedge. I mean, we are very short the market at the moment overall. However, this we're just pretty much using as a hedge for whenever we scalp micro NASDAQ futures, which we didn't do too much scalping in this today. We only managed to have about 32 points of profit today. We did profit a little bit last night, only about 10 points if I recall. So overall, since yesterday, about 44 points. We profited over like 100 points yesterday, so not a lot really today. We missed out on some opportunities, but I had a doctor's appointment and other things going on. So, yeah. So, but overall, still down on most of these other positions. However, we locked in profit, like I mentioned, on O. We're going to be talking about that quite a bit. We have calls on Disney, which look like they'll probably pay us out tomorrow. We do have a vertical spread on Disney as well, which we might have to roll up depending on how Disney actually looks tomorrow. But For the time being, we have it set at 122, 125, but we're going to be focusing on this 128 call today. We have two of those that are very cheap. They are only $35 when we bought them. They're currently around 33, obviously, and after hours trading options do not move. They are not tradable in after hours, unfortunately. And then, like I said, we have the NKLA position. We only have 5 shares. We're using that as a very, very, very small hedge. In all honesty, I'll probably just hold these shares forever. Same thing with SPCE, the Virgin Galactic. We'll hold that probably forever, at least until it's pretty profitable. I mean, it's only 5 shares, so it's a very, very small portion of our portfolio. And then, like I said, we still have that Apple, which is just a lost trade. It was also, going back to yesterday's video, like I mentioned, it was a hedge from last week. The max loss was $120. Today, we're pretty much there. However, of course, we profited big on MNQ. We were just using that again as a hedge. So when you look at a lot of these positions, it looks like we're down a lot, which we are in terms of these actual positions. But again, they are hedges. And you gotta take that with a huge grain of salt. Actually, on the day we were up right around $300 last I checked, after closing all positions and whatnot, and then with the remaining positions, like a net profit essentially on the day of roughly $300. As you can see here, like I said, 325. We're gonna break that down. NKLA profit loss on the day. It shows 28, but we did lock in a $50 profit on some scalps of puts, and those are pretty much the only trades that we really closed today. Other ones, like I said, they're more so geared for tomorrow. So now we'll go back to NKLA real quick. Actually, we'll start with O since it's already pulled up. So we bought some calls in O going back to yesterday, right at the end of the market session. So I mean, it worked out perfectly for us. Market dipped, or not the market necessarily, but O dipped, and we bought right at the end, very cheap calls. And the reason we did that is one, I followed this company for a while, and I did not expect their earnings to really, I didn't expect them to necessarily beat as much as they did, but I did expect them to beat their earnings estimates, which they did pretty well. They beat them by about 8 or 9 cents a share, it looks like. And guidance, I believe they have their conference call. It already happened apparently, which it dropped a little bit apparently. So might be looking to do something with it tomorrow, depending on where it goes in the market in general. But going back to our trade, we literally placed it at the very end of the day. If we actually go back to our account statement, our trade history, let's see, stock. SPCE, let's see, how far back? Oh, here we go, right here. So you can see we bought 10 contracts of the O. The closest expiration was August 21st, so it was a few weeks out. And those were 63 cents, which is $63. So it was a total of a $630 position. A little bit bigger than I expected. I'm not going to lie to you guys. I meant to only buy 1, so that's how it worked out here, but we did buy 10. And I was fine with that because it was only $600 position on a $15,000 portfolio. Very small position, roughly 5% of our portfolio, which again, like I tell you guys over and over and over, I would only suggest with these options holding around a 5 to no more than 15%. Obviously, it's harder with smaller accounts that are $500 to $1,000. But if you have over 5-10 grand, I would definitely only trade about 5-10%, 15 at the most in options. So this fell into that, and again, we bought the 6250 calls. I believe they were the closest to in the money calls that you could buy at the time. It went like 60, 6250, 65, etc. So we bought just slightly out of the money, and then as you can see, we sold them first thing this morning, less than a minute after market open, which if we had held them, we would have actually made over $45 per contract more. Oh well, I mean, we still profited over 30 cents per contract, $30, which essentially when you're looking at in terms of percentage, you can see it was pretty much 50% return. And like I said, I mean, we pretty much, in terms of holding it, we held it for 4 seconds into the close, and then we sold it. Where are we at? There we are. 49. So we held this technically in trading terms for about 1 minute in terms of actual trading hours. However, we held that overnight, and again, the reason being, when we go back and look at that earnings, solid beat. People started buying, of course, and then right into the open, we sold. We did not hesitate. We did not bag, hold, or anything. Hindsight's 2020. If I had 10 contracts like that again, what I would do is probably sell 5 or 6 of them in the open, and then I would have wrote it out, because like I said, if I wrote it out for literally just about another half hour, those were up 177%, where we locked in profit. Still good, 50%. I'll take that all day, every day. But we left over 100, or not 100, we left about, actually about 100% profit off the table, but we still locked in $325, so I will not complain for sure. And again, these are the only times that I play these options. I do not really suggest, for the most part, doing calls, doing puts when there's no earnings going on, but when earnings is going on, that is definitely the time to take advantage of those options. And then we also saw that NKLA Corporation was up around $39 to $40 early this morning. And go back to that, monitor account statement. We bought that, let's see, we bought those at 9:20 this morning, so about an hour after market open. We bought the 30 strike puts at 55 cents, and then we sold those, let's see, where did we end up selling them? We sold them for, 65 cents, so not as big of a profit, $15 essentially times 5, or no, 10, sorry about that, $10 times 5, $50 scalp there. We held it for a little longer than I really wanted to, in all honesty. I was thinking about originally holding these through the actual earnings report, but we ended up buying those back. As you can see, we only bought one, if I remember right. Yeah, just one at 60. So we just pretty much bought it back for a slightly lower price. It's all about cost basis. At the end of the day, don't leave profit on the table where they could potentially take it right back from you. And then also we did buy 29 put right as the market was about to close. Just barely got filled in time, 4 seconds before the close, at 50 cents, $50. So those will be looking nice tomorrow, more than likely. As of now, looking at the stock price, man, I mean, these could be up 100% tomorrow, maybe even more. I mean, it depends on where this opens. If it keeps going down, I mean, we could be looking at some big profits on NKLA tomorrow. Now, obviously, we only have 2 contracts, and they were relatively, going back to that, I mean, $50 and $60, so $110. I mean, we'll probably only make like $100 on that, but I mean, to turn $110 into 200 plus, I mean, I'll take that every day of the week, of course. And it could be more. I mean, it just depends on where this ends up going. So I will keep you guys updated on that, of course. But like I said, guys, it's all about the earnings reports. And you gotta, and it's not even just the earnings. Just take a look at the stock overall. I mean, it's had a dip. It's had a nice rally off of that dip. However, if we go and take a look, was it the 1-day chart, I believe? Or maybe it was the 4-hour. Let's take a look. Yeah, the 4-hour chart here. You can see a bearish divergence there within our SMA lines. And then also, what do you see? Ever since it broke below this SMA line here, it's just been in a descending pattern ever since. It has attempted to kind of break out. However, it's kind of in a make or break area right now, right around this $32 to $33 area. If this thing breaks below 32, what would I say? Probably 32.50. I mean, if this thing breaks below 32.50, it's probably going back down and probably going to retest that $29 low. So, to answer the question of the title of the video, no, NKLA down here is not a buy, in my opinion. Now, when would it be a buy? If, and it's a strong if now, if this thing can bounce tomorrow, and I mean bounce hard, like say, it's probably going to see a little bit of selling into the open, depends on what the overall stock market does too. Let's take a look here. Stock market right now, pretty much unched across the board in the futures. That's what I was taking a look at. Really depends on how the futures market moves, in all honesty, overnight tonight. And honestly, I'm assuming the market's probably going to drop tomorrow. It's been on a pretty good stretch lately of up, but that's a different topic for a different day. But how that affects NKLA also, though, is, I mean, if the stock market also is going down, this is probably just going to keep going down with it. So just keep an eye on it tomorrow. If you see a heavy bounce and it closes tomorrow above like $37, then at that point, I would not mind if you guys wanted to start nibbling on this. But there's really no legit reasoning for this thing to go up. I'm assuming it's probably going to test lows, not tomorrow, but probably sometime in the next week. At that point, maybe reevaluate. But honestly, I mean, this stock, I mean, it's a horrible stock at the moment. It could be a Tesla 2.0 in the making, but as of now, that is just horse shit. They have nothing to show. They don't even have, I mean, they barely even have designs, guys. I mean, come on. Like, just imagine if we opened up a company, we went public to start raising money, and all that we had to show was designs. They have a few orders. Yippee. I mean, what was it, like $36,000? So what does that mean? They have like 2 orders maybe, if even that. So, I mean, this stock is a total pump and dump, and that's playing out. I mean, like I said, if it can find a support right around here, right around this 32.50 level and bounce, then who knows, you might get a test of that $55 level, maybe. Just not enough risk reward for me to want to go long. But as for why I decided to short, I mean, I pretty much explained it. I mean, it's in a descending pattern overall. I saw that we briefly are up above it. However, been on a pretty good run lately. Going back to that 4-hour chart, you can tell, I mean, it had an RSI of around 70 to 75. That's pretty hot overall. I have my RSI set at 80 because I trade NASDAQ. I mean, NASDAQ's so crazy, it can hit 80, 95 before it really starts to pull back. So that's why I adjusted that. But anything over 70 is considered high. So, I mean, it was up at 73 to 75. And then I expected their earnings to just be horrible, and that's pretty much what it was. And if I remember right, the conference call did not go so well either. So good call there. And that's the thing, you just got to be able, don't just strictly go based on your gut with these earnings. Don't just think, oh, earnings are going to be good, like, don't, and then just buy calls. Don't do that. You got to take a look at the chart. You can see clear descending pattern trying to break out. However, like we said, I mean, if that fails and breaches, if it breaches that and fails, I mean, you're talking about going back to lows, so, or recent lows, I should say. So that's why we placed the puts. That's why we're probably going to be up north of 100% on those puts tomorrow. And again, I cannot stress enough, when you're buying calls and puts, do not use a large position in terms of your portfolio. Obviously, if you're only trading with like $500, you don't have much of a choice. But just be very, very, very selective. If you have $500, stick with vertical spreads. If you're bullish, don't just buy a call. Buy a short put spread. That way you're collecting premium. You have a defined risk. So let's say, for example, I'll show you guys here what I would do. If I had a $500 portfolio, and I should do a video about this sometime. If I had a $500 portfolio right now, how would I trade this knowing what I know now? What I would do is I would go in here. I would look at option prices. Say, again, I was bearish on this position. We don't need the time and sales. We need the option chain. So what we do in Thinkorswim here is go down to vertical. And again, for those of you that don't know what a vertical spread option is, all you're doing is pretty much saying that I think this stock is probably going to move up. I expect it to stay above X price. Or if you're doing a short call spread, you're saying I'm bearish. I think the stock is going to stay below X price by this date, and I expect it to go down, if anything. So in this case, since we're bearish, we would have placed a short call spread if I had a $500 portfolio. So what I would do here is, again, go back, look at the chart, go over here, go back and look at the chart. I would look at a longer view, at least 20-day, 1 hour at the minimum. I would see, okay, so the sell-off really began around $49. And we were expecting a big move, by the way, within NKLA one way or another. So since I seen that the sell-off really started around we'll call it 48 bucks, I would say, okay, it was hovering around 40 today. I'm gonna go ahead and look at that 48 strike price. So what I would do is not do the weekly. In this case, I would go down to probably somewhere around, you could do 21. Yeah, we'll do 21 here because you're doing a smaller portfolio again. And again, like we said, what we'll do is we'll come down here to around the 48. We're gonna actually be selling, not buying. Make sure you do not want to mess that up either. You want to sell. If you're buying it, then you're expecting it to go up. Just make sure you have a sell. You're wanting to sell the vertical spread, not buy it. So we're only going to do one here because we have a small account in this case. And again, when we do these, we usually like to have a minimum of a $3 strike difference. So if we're at 48, what we probably want to do is go out to, let's do 51 for example. So see, your credit here is $25. So you can see your max profit is 25, your max loss is 275. Not enough risk reward there in my opinion, so let's go ahead and edit it. And again, this is where you just kind of start playing with it. So let's go to 54. Okay, so now we're talking $65 for 535. That's still not worth it. So what we're gonna do is we're gonna delete this, and we're actually going to go out one more week. Sometimes going out one more week can give you a lot more credit. You'd be surprised how big the difference is. So again, let's do 48 again. We're selling it. We're only gonna sell one. Like I said, we'll start with 51. So we got a 45-cent credit. 255. I mean, it's a little bit better. You're talking roughly. Again, when it comes to these short credits, you're probably, or short call spreads, you're probably talking only collecting usually about 40 to 50%. So you're looking at probably, let's call it $20 a profit, risking 250. You're talking less than 10% risk reward. I don't really like it there. So again, let's go in there. We're just gonna edit our strikes a little bit. Let's pull it down to 47, and then let's pull this down to 50. And hold on, let's see here. So 40, yeah, let's see. So now we're talking $40 for 260. So it actually got a little bit worse there. Let's see. 46 is the lowest I will consider going on this. So we'll do 46 and we'll do 49, 65 credit. Okay, so that's a little bit better. You're talking roughly $35. You're probably going to make 30 to 35. Again, you're only risking 235. And again, this is what happens when you're trading with a small portfolio, which is why I highly suggest, until you have enough money to where options can be a very small percentage of your portfolio, I just don't really recommend trading options. I recommend just simply buying stock, find stocks that are on sale. I've done it every time that I've like started with a new account or something, started with a small amount. I usually just trade leverage ETFs like SQQQ, TQQQ, UDAO, SDAO, etc. I have videos about those throughout the channel and whatnot, but it's just, there's not enough risk reward there. Someone like me, what I would do, since I was short, since I have more capital to risk, I would have probably done the 45 strike with a 50. I would have went ahead and went $5 on my strike difference. So you can see here now, I'm able to get a max profit of 115, risking only 385. So I'm only risking $100 more than you, which is not a lot really, but when you're talking about small accounts, it is. And I'm gonna collect $50 more credit. So in the end, I'm still looking at 50, 60 bucks, and I'm risking 385. So I mean, I don't know. It's just, I mean, the risk reward is still about the same. It's just more in terms of dollars, I guess. I don't know. To me, it just, there has to be enough meat on the bone available, and whenever you're trading smaller options, there's just not enough meat on the bone available. So then you're in a position where you only can really buy calls and puts, which again I don't like unless if you're doing a really small amount. Now, what you could also do in this case is, again, going based off of a $500 portfolio, is do kind of what I did. Now, you're only going to be buying one contract in this case because you have a small count. Like I said, when you're doing calls and puts, you want to keep those positions ridiculous small. Vertical spreads I'm a little bit more lenient on just because they have a lot less risk. Your potential for profit is usually north of 65 to 75%. So there's a very good chance that trade's going to be profitable, depending on how you do your set up your strikes, obviously. Now with calls and puts, your max potential profit is going to be 33%. Your max is usually around 33%. The average option trader is usually buying options when it comes to calls and puts that are usually around 19 to 21%. So you have a very little chance on these even making money. You're usually scalping these, doing like what I did where you're buying them right at the close and just planning on flipping them by first thing in the morning where you don't have a lot of time decay eating up your option. So what you would do here is just simply, again, we're going out to the nearest expiration, and since we're doing an earnings play, and again, we're bearish, we're going to go out and say it's a $500 portfolio. I do not want to spend more than $50 on one of these. So what I would do is, got to go back to single options. I knew the prices weren't making sense. Go to the put side. So what I would do is buy the $29 strike. $29 strike. We are buying. $29 strike is right at $50. So I mean, you have $50. It shows a max profit. I mean, technically your max profit's infinity. It shows $2,000. I mean, the only way that's going to really happen is if the stock goes to like zero, essentially. But yeah, very minimal risk there. You're only risking 10% of your portfolio, which is the max that I suggest when it comes to an option trade. So yeah, I mean, if you're trading with a $500 portfolio, that is the highest that I would risk when it comes to doing options, just because you don't have very many options. Whenever it comes to the stock market, it takes money to make money, and if you don't have that money available, then paper trade, or like I said, just buy stock. But just going back to the main topic at hand, NKLA, no, I do not believe it's a buy down here. The only way that I do is, like I said, it has to hold. It's holding up pretty well after hours now. It seems to be kind of finding some sort of a bottom. Looking at that, maybe not actually. We'll see here. It's retesting again. So if it can hold around here, it might be trying to start to search for a bottom. But like I said, if it breaches that 3250 level, going back to our 4-hour chart, if it breaks that, you're definitely looking at a waterfall, probably back to the recent low, minimum $30, $29-30. So I would not buy it right now. I would not touch it with a 10-foot pole. That's why I placed puts on it right at the close that are probably going to be up north of 100% tomorrow. But plan accordingly. If you think it's a good buy it. Me, if I play it, it's just going to be to the downside because I'm not buying the hype. It's not a Tesla 2.0. All that they essentially have is a bunch of drawings of trucks. I mean, it's literally just a thought right now. Pure speculation. I mean, it's a penny stock, essentially. It is just speculation. Now, a lot of people are saying Tesla started off the same way, which is true, but until we have something definitive, I think you're just going to see a lot of this penny stock-like activity, which is great for those of us that like to buy puts and calls, especially if you're on the right side. But as for anybody that's actually looking to buy it, I would not buy it until, at the minimum, the end of tomorrow. And that depends on if that $32.50 to $33 level holds. If it holds, then maybe start to nibble on it a little bit. But until then, I would not buy it. So yeah, the other one, NIO, that's another one that I know a lot of people play when it comes to this type of speculation is what I like to call it. NIO, same thing. I wouldn't buy it up here. If anything, I probably should have also shorted at the close, but I'll probably wait till earnings actually. So I'll be keeping my eye out on this. It's a week from today. Looks like a double top might have formed too on the daily chart, so who knows, it might be getting ready to go down even before the earnings report. We'll have to see how that plays out, but I will probably be shorting this one as well, buying some puts depending on how the price action looks the day of the earnings. But other than that, I did buy some Disney calls going into the close today. To kind of hedge we do have a vertical spread, like I mentioned at the beginning, a vertical call spread, which is assuming that Disney will stay below, I believe 123 is the break even. We might have to roll that up tomorrow. I'll evaluate, depends on how Disney acts up here. This is a very strong resistance level, right around 122, 123 for Disney. But as you can see, after hours, boom, another winner, it looks like as of now. We bought those at 35 cents. We only bought 2 of them, so $70 total for that, which would have been a great trade for those of you with the smaller accounts. Did call it out in our Discord group chat. Like I said, it's free to join if you're not in there. Description is in the link below. But that would have been an awesome trade for those of you with those like under $500 or under $1,000 portfolios. That would have been an awesome trade for you, maybe. Like I said, I'll never tell you guys what to invest in or anything. I just call out my own trades, of course. It's up to you to make the decision. But as you can see here, initial drop and then boom, it's just shot up straight. Who knows actually how much these will profit. I mean, we bought them close to the close. Let's just say we got in at like, I'll just say 117.25. So say we open at 123 roughly, or not even 123. Let's say it cools off a little bit and comes down like 122. 4% move. That could also be another 50 to 100% winner tomorrow. So wouldn't be huge profits or anything, but it all adds up, of course. It all adds up. Whenever you just start compounding those gains and compounding all your winners, and then you have the occasional one like we had with O, where we had 10 contracts where it just boomed right out of the gate. I mean, it adds up. You're talking a couple $100 to $1,000 if you play it right. And again, I cannot stress enough, I only do this during earnings season, guys. If there's one thing you take away from this, I only do this during earnings. And it's not me simply just betting on the earnings. Again, I go back and look at the chart. This one, for example, 1 hour chart, saw we had a bullish cross there. Saw that we did not come down. We didn't even test that 58 resistance level, 58, 59 as a resistance level. We bounced ahead of it. Bounced higher than that level going back to yesterday. So what did I do? I bought right at the close, which is what I always do every time when it comes to these options, unless if I'm just doing a quick day trade scalp, which is very, very, very rare. It's usually on accident, just happen to get it at the right time and get in and get out. But again, hopped in because we saw we liked the chart set up there, and then again we're expecting a beat on the earnings, and that's what happened. And then I mean, again, it's all about good companies. Talking about calls in this case, talking about good companies. They pay a monthly dividend. They've been one of only few companies to actually stick to their monthly dividend, and not only that, increase it. As you can see, they just increased it recently. Very solid company. Expect them to be around for a long time to come. Still on sale, actually, ever since the coronavirus stuff, because it is kind of like a REIT, essentially. So kind of lagging still. Has a lot of room to make up. I mean, if you're a stock buyer, I mean, this is an awesome stock. I'll say that much. But yeah, you can't just simply just blindly, oh, the stock has earnings, let me just throw a gamble on. Like, definitely still do your technical analysis. And then just, like I said, take a little small bet. Like I said, I mean, this position was a $600 position. We profited $325 from it. $600 is only, what did I say, about 5%, or actually less, I think, but right around 5% of our total portfolio. Like I said, Disney, we only did a $70 bet there. I mean, $70. I mean, that isn't even a percent. I mean, it's a ridiculously small amount of our portfolio. And then going back to NKLA, going back to NKLA. Like I said, I think that one total was somewhere around like $100 position as well. So very, 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 very small positions that could potentially, again, just compound and make you a good chunk of money and literally overnight. So I love earnings season. When it comes to options, it's the only time I trade them. But yeah, that's pretty much all I got for you all today. We'll take a look at futures market real quick just before I head out. Looks like we're still pretty much around the flat line. Dow up 17, NASDAQ down about 10. I'll keep you guys updated in Discord and let you know if I do any scalping or anything of the futures tonight. It'll probably be the NASDAQ if I do so. Don't really see any setups at the moment that make me really want to scalp it. Had a good downtrend today, broke out of it, tested it again, bounced right off of it, and then just rallied from there. I did not get in. I was actually in a doctor's appointment when all this happened. Missed out on that, but congrats to those of you that did pick up on that. So like I said, had a few scalps in that throughout the downtrend. Unfortunately, doctor's appointment throughout the best part of the day. I mean, today kind of sucked. I mean, the range was it was very choppy. I did have a good trading range there for a minute, but even that range was only like about 40 points overall for the range. And then, of course, the best happens whenever I was in the doctor's office. So if you made money on that, congrats. Like I said, we only did about 32 points today on the NASDAQ, not a whole lot. But we'll see how the night goes. We'll see how tomorrow goes. And like I said, I'll keep you guys updated in Discord. If you're new to the channel and like the stream, hit that thumbs up button. I greatly appreciate that. Helps the video and helps the channel out, apparently. YouTube's algorithm BS. So greatly appreciate that. And like I said, if you're new, also smash that subscribe button, hit the bell icon right beside it. That way you'll be notified every time we go live or upload another video. We were 1 subscriber off from hitting 1,100 subscribers. So if we can hit that, that'd be awesome. Thank you guys for all that support and hitting that subscribe button and whatnot. And like I said, we'd love to have you in our Discord group chat. We have like 200 plus members in there now. So if you're not in there already, what are you doing? And I just realized I hadn't checked the chat in a while, but it doesn't look like we have any questions or anything. So since you all don't have any questions or any stocks or anything you want me to take a look at, I will just go ahead and sign off of here. Like I said, if you're tuning in at the very end of the stream, or if you're seeing this after it uploads, hopefully this new YouTube deal that they have set up is working all right. But until next time, guys, keep on going out there, make your profits, cover your profits, and achieving your financial freedom this year. And I'll see you guys in the next stream here, hopefully before the end of the week.